Hello, everybody. How are you guys doing? Welcome to today's episode of That Crypto Show. This live episode, I should say, brought to you here live from Berlin to the whole wide world from our PrimeXBT trading studio. And my name is Dirk Hartig. I'm the head of trading education here at PrimeXBT.com. I'm also a professional trader with almost 25 years of experience. And on today's show, we, for a change, do not so much want to talk about trading. We have another topic today. We want to talk a little bit about altcoins. We want to get out the crystal ball, look into it, and try to determine what could be some of the top projects that could generate a nice revenue for us during the next bull market, during the next cycle, which maybe is going to start, who knows, in 2023, 2024. So a little bit a look in the future. I'm going to want to show you, first of all, let me make my screen a little bit bigger that you can see better. So we are, so to say, on the menu today. We want to talk a little bit about the last cycle, so the one 2017, 2018, and the current cycle we are in, actually. So about what was hype there, what were people crazy about, ICOs, DeFi, the NFT craze, because I think we can learn a lot about what maybe the future has in stock for us. We are going to also look then at which coins are probably going to survive the next 2 to 4 years. And I can promise you this is going to be maybe for one or two of you guys out there a little bit eye-opening. And I, of course, also want to then, in the last part of this live show, talk about 3 projects that I currently have on my personal watch list, plus one bonus project that is. As always, if you have any questions, please leave us here a question in the chat. If you are watching a recording of this later on, you can, of course, leave us also a comment. And I'm then more than happy then to try to answer your questions, should we still have time here on the live stream today. Also, before we start, please leave us a like, subscribe to the channel. This is, so to say, our reward if you like us, that you leave us the like, that you subscribe to the channel. If you are not yet a client of PrimeXBT.com, you can also find a link to open an account in the description of this video. And as always, we also have a great promo code called Trading Academy. And if you use this promo code, you can get up to $7,000 in bonus, which is super, super great to start your trading career. Last but not least, you also have the opportunity to get in touch with us by email, academy@primexbt.com. Don't be shy, drop us an email, and I'm more than happy to answer all of your questions there as well. All right, good. Then let me see my agenda here. We're going to start with looking a little bit back. And I know maybe for one or two of you that might be a little bit boring to talk about the past, but I think it's important, it's especially in my opinion important to really understand why I chose some of those projects, of what I think they can become important, either the project itself or the topic they are working in, the field that working in 2023 to 2026. We want to look first of all at 2017 to 2018 at what I call the ICO craze. And yeah, there is a nice picture here from the Forbes magazine, in my opinion, which describes pretty well what was going on later there. So basically, we had this ICO craze in 2017, 2018. ICO stands for initial coin offering. That was the hype back then. So everybody was trying to generate their own token, bring that into the market to get cash from investors. In 2017, 2018 alone, we saw over 800 ICOs. And those ICOs collected in total over $20 billion of cash. And back then, and still now, that was so special because it was the first time really that small startups even very small teams with maybe great ideas had the opportunity to directly connect to retail investors. So to directly, by the end of the day, connect to you and me, we would give the money and in return get the token for that. Before that, you either had to go to your bank or you had to go to an angel investor, a seed investor, or a venture capital fund. And normally those investors, they would very fast breathe down your neck to see some sort of revenue and have the exit. So the sentiment there was completely something else. And that all changed in 2017, 2018, as you might imagine, when there is a lot of money to be collected on the market, this also collects a lot of scammers. And it really was so. So 95% of those ICOs that were done back then failed, either because people were scammed. So basically the founders collected the money from the investors and then ran away with it. That was quite common, still is quite common, to be honest, as well. And or the project didn't deliver quite what the expectation was. And 2 examples of those I quickly just want to go over, because it shows us by the end of the day also that investing in altcoins always is a risky business. The first one I've chosen here from back then is Mobilego, because it was a quite big ICO. So they raised 53 million US dollars back then, quite a sum. Even nowadays, if you are a startup, you can collect that amount of money. That is really, really significant. And what they wanted to do is some sort of crypto mobile gaming store that also has a payment gateway and, something probably where nowadays you would ask yourself, okay, what do you need a cryptocurrency for that? You can do that also without a cryptocurrency. Long story short, back then ICO price for one token was 76 cents. Now, as you can see, this token is trading at under 1 cent, almost a half cent. So if you invested in that back then, you have lost more than 99% of your money. And this is really the danger. So this was a rather large ICO back then, 53 million. Same here with an ICO called Polybios, which came onto the market in July 2017, so almost 5 years ago now. And if you read here, they collected, by the way, 32 million US dollars. And if you read what they wanted to do, it's basically like, oh yeah, we don't really know yet what we want to do. We are going to develop something, when we have collected the money. And so it's like a best of, venture capital, pardon my English, bullshit bingo, really. And also here, if you would have bought this token at the ICO price of 10 US dollars, you would have lost almost 90% of your money. It's trading at 1.21. So why am I showing you this? Because I think it's important to understand that yes, ICOs back then and still are a great medium of collecting money directly from users. So you don't have to go through the middleman there anymore. But it's also a very, very dangerous thing to use. And it still is, because you have to do your homework. Investing in altcoins is always a dangerous business. Later on, I'm going to show you why and how we can try to circumvent that and, lower the risk a little bit. But nonetheless, the idea there was and still is that small teams, small developers, even single developers that have ideas for projects that in the long run should benefit the whole world technology-wise, that they were able to directly access private investors that otherwise either would never have heard about this project or could have never invested in it, because the private investors in normal venture capital invest in projects when there is an IPO, so a public offering, when a project goes onto the stock market. And usually this project, of course, is very big then already. As we've also seen, for example, with Facebook, with Airbnb, and so on and so forth. And now, one last thing here about ICOs and the danger of investing in altcoins. I want to show you a comparison of where we are today in terms of projects in the top 10 and how that whole top 10 looked 4.5 years ago in December 2017 at the top really of of the bull market back then, where Bitcoin almost had touched already $20,000. And what you can see here, we find in the top 10 names like Bitcoin Cash, IOTA, Litecoin, Dash, Bitcoin Gold, Monero, NEM. And you can really go down the list. BitConnect, who remembers that still, turned out to be a scam. You'll find a lot of projects, actually to be precise, 7 out of the 10 cryptocurrencies in the top 10 are not in the top 10 nowadays anymore. So only 3 cryptocurrencies survived there. Of course, Bitcoin, of course, Ethereum, and one is tempted to say, of course, Ripple. All the other ones have, I don't want to say falling completely out of existence, but if you would have invested in those altcoins back then, even with this bull market, you still would be sitting at a loss. I mean, let's look here at Bitcoin Cash, for example, which was trading at $1,300 there. And if we want to find that now, we have to go to spot 25. It's trading $182. And this is true for almost every coin here in the top 10. And not to mention, if you go further down the list, you'll find a lot of those coins that back then were quite hyped, that might not even be in existence anymore. And I'm showing you this because I want to raise a sentiment here that, if like 7 out of 10 projects in the top 10 of the cryptocurrency by market cap have not made you money. So the further we go down the list, if we then look at the top 50, it's going to be even worse. So when you invest in altcoins, and that's what I mean about this, yeah, you can make a lot of money, but you also have to be prepared to lose a lot of money. So you have to kind of, do your homework, right, in order to not lose too much money. And how you can do that, we will have a look at later on as well. Now, going back to this graphic here, if we look at 2020 to 2022, what was hype there, and I'm assuming here the bull market is over because we have come down by quite a lot already, and the Luna debacle probably gave us a little bit of a rest there. So for sure to say DeFi 0.8, I called it here, so the beginnings of decentralized networking, decentralized altcoins. NFTs was the hype, maybe to a certain extent still is the hype, yield farming, and of course, who could forget it, staking. And there are also good examples and bad examples here. If we look at the DeFi market as a whole, there's a lot of money that, especially in comparison to where we were back then in the market cap in 2017. So at the peak, we had almost 250 billion US dollars locked up in so-called DeFi protocols. This, of course, has significantly come down. And this whole slump here, the large slump down, of course, was caused by the unraveling of Terra Luna and Terra US dollar. The DeFi community, a lot of DeFi projects, of course, have a hard time now getting people to believe that they are legit. And not to mention NFTs here. If you see like some NFTs a while ago, like this one here, the first 5,000 days were sold for 69 million US dollars. So a lot of money, to get the rights on a JPEG, so to say. And this is also kind of unraveling at the moment. And this is another example of how fast these new projects also can come down after they are hyped up. When Jack Dorsey got into this whole NFT thing, Jack Dorsey, so the co-founder of Twitter, by the way, he made an NFT out of his first tweet. So this is the picture you see here, just setting up my Twitter. And he minted an NFT out of this one, and it was sold to the CEO of Bridge Oracle, Zina Estavi, for what was that back then, 2.9 million US dollars. And now, just last month, this person tried to sell the NFT again through an auction because he or she thought that with this whole Elon Musk thing going on with Twitter, Elon Musk buying Twitter, there must be a lot of revenue to get from this NFT now. So he tried to sell it for 48 million US dollars. But the highest bid over OpenSea, that was received for this NFT of Jack Dorsey was $12,700. So again, a 99% loss. So that is, quite significant in my opinion. And these are really the dangers we are facing when we are investing in everything outside of Bitcoin. Heading back to this graph here, the question now, of course, is that we see a bit of an evolution going on here. In my opinion, what we saw in 2017, 2018 was this phase where the focus was on raising capital. So you suddenly had an environment where developers saw, hey, wow, it's easy to raise capital. People want to invest in projects, in new technology. It's easy to raise that. And when capital is easy to raise, there are also going to be a lot of scams. Just because, like we just saw, a project raises a lot of money doesn't mean it's going to be successful necessarily. Also, this we saw with Terra Luna just again. Then 2020 to 2022, where we are right now, I like to call the creative phase. So we have a lot of money still coming into the segment, and development teams try to work on a vision. For example, hey, we can tokenize objects, starting, for example, with JPEGs, and you can own the rights of them, and it's immutable because it's taken down and noted on a blockchain. Or we are going to try to build something like decentralized finance, where if I need money, I can, over protocols, directly approach other users who want to loan out their money without the need for a middleman. And so it's still on shaky foundations, but it's going into the direction already of we are trying to come up with real live use cases for blockchain. And I think this is the trend that is going to continue to develop over the next years. So what I'm expecting, and these are the projects I want to talk about today, are all coming from these 4 topics, what I call DeFi 1.0. So really true decentralization, where the middleman is totally cut out, where you just have to rely on technology and so-called protocols. X to earn, I think most famous probably play to earn. You guys probably have heard about Axie Infinity. So where you are using something, for example, in the metaverse or a game or other projects that we cannot think of at the moment, where that when you use them, you are going to earn money, which is very, very interesting for people that do not have access to banking, like most people in the Western world, for example, have. Then something I like to call RWA, which stands for real world applications and easy user interfaces. Because right now, when you go into crypto, especially into the world of decentralized finance, those projects tend to be very, very complicated. So it's like if I imagine my father, for example, trying to understand how he can use some of those DeFi protocols to stake in return to DeFi, and then you have to use different blockchains for that or different networks. It's super, super complicated. So you take really a lot of time to get into this and to understand what is going on there. And again, let me mention Terra Luna here as a bad example. Everything sounded very smart, but wasn't in by the end of the day. It was just very hard to understand for the normal person. So I think we are going to see a lot of developments in that direction to make it more approachable, cryptocurrencies or crypto projects as a whole, for everyday solutions. And I'm going to have an example of that too. Then the fourth one is stablecoins. So whoever is going to crack this enigma of stablecoins and able to really issue a fully transparent stablecoin is going to win the race, because this is going to bridge to fiat by the end of the day. What we are having right now, is not always that transparent, or as we have seen, also stablecoins can also collapse very, very fast. The 3 projects I want to talk about today are coming here from the world of DeFi and real-world applications, because play to earn or X to earn and stablecoins are topics I would like to address in a different webinars, especially this play to earn or X to earn. More generally speaking, I think really deserves a webinar of its own, because it's such a huge thing to come, and it's going to totally blow our minds, in my opinion. Good. One thing before we start, I would like to address here, before I start introducing 3 projects, that is, I would like to address here is that none of those projects I am currently invested in. So and totally on purpose, it would have been easy to buy those now and then to advertise them here, but I didn't, because I don't want to be put into the corner of some pump and dump scheme out there that I buy upfront, then introduce projects to you guys, and when you buy them and drive the price up, I'm going to dump them. I'm not invested in any of those projects. If I choose to invest in one of those projects, I will let you know in the future. I want to be very, very transparent when it comes to that. Good, let's start with the first one. The first one is called GMX, and I think this is very interesting because it's a project in something that concerns us all. It's a decentralized perpetual exchange. So basically where you can trade tokens and maybe in the future also fiat currencies directly with other users without the need of a third party intervening. So it addresses especially the problem, like when you want to trade your cryptocurrency, that you always have a third party that you need to trust. And if that third party fails or scams you or is hacked or whatever, and we've seen exchange hacks, of course, plenty in the past, then basically your money can be gone also very, very fast. So I think this is interesting, and this might be the future of not only cryptocurrency exchanges, this might be the future also of general money exchange, can even be the future of exchanging goods and services. The list basically is endless. For now, they're concentrating here, of course, right now on cryptocurrencies. I think GMX is one of the more interesting projects because they are not that old yet. The revenue, which is the green line, is a bit shaky, but they are having positive revenue. And over the course of a time, this revenue has been going up as well. And I think this is very important when you are in a sector like this, that you show, okay, this actually works and I'm earning money. Now, the interesting aspect about a project like this, in my opinion, is also that they have, of course, their own token, which is called GMX, who would have known, and another token called GLP. This GMX token, it works as the so-called governance token for the exchange, and it gets 30% of all the fees that are generated on the platform by trading. This GLP token is the liquidity provider token, so you can stake your token to provide liquidity to the platform. Sounds very familiar, probably, if you have looked into yield farming, for example, which gets 70% of the generated fees of the platform. And that's, of course, very interesting, that you can not only use a decentralized platform for trading, but that you can also participate in getting revenues from those platforms if you hold their token. There are plenty of projects like this, by the way, out there, and whoever really nails this down probably is going to invent the future of exchanges. Now, for every chance there is for a token like this, there are, of course, also risks involved. And one of the risks I see here is, first of all, again, that it's not, in my opinion, at least very user-friendly. So you have like 2 different networks that you have to use depending which one of those tokens you are using down here. That makes things a little bit complicated, in my opinion. Then the second one, at the moment, if you stake your GMX and GLP tokens, you get rather high staking rewards for that. I mean, look at this here, 23% for the GMX token, for the GLP token, 29%. And this very much reminds me also of what we've seen with Terra Luna, which also had this high staking reward for Terra UST, which and they had this to attract, of course, more money to scale up the network as fast as possible to make it basically too big to fail. But we've seen even with a market capitalization of $40 billion, you still can fail in a spectacular and very fast manner. And so the one thing I really, before I would choose to invest in this, would like to look into would be, okay, is this yield really generated only through the trading revenues this exchange is generating, or is this subsidized? Meaning, are they using their own money to pay out more to attract more money to the platform? Which is okay to do, at least for a while, but in the long run, if you do it too much and with too much money, you are going to go bankrupt. So this is the danger, for every chance of there, of course, there is also a risk involved, especially with altcoins. Next project I want to look at is called Centrifuge. And this one is very interesting because, in my opinion, it addresses the important point of real world application, because this project and this token aims at generating a bridge between real world assets and DeFi. Now, this sounds very spectacular. What it means by the end of the day is, if you want to take a loan, for example, if you need a credit, what you probably would do at the moment is you would go to your bank, say, hey, you know what, I need 10,000 US dollars. The bank would say, okay, what do you have to offer as a security? Well, here are the keys to my car, or I have a very good and stable income, and I'm going to promise you, should I not pay back, you can use my income to pay the loan back. Or I have real estate, or I own royalties on music or whatever. And this project is aiming that you can basically take those real world assets, for example, let's say your house, mint them in brackets, mint them into an NFT, and then offer them as collateral for borrowing money on this project on Centrifuge. And I think this is very interesting because this is something users out there, I'm going to take my father again as an example, there really can comprehend, right? Okay, I have something to offer as a security. I need some money. I'm going to deposit the security. I'm going to get my money back. And if I don't pay I'm going to get money. If I don't pay the money back, my counterparty can take my real estate or my car or whatever I minted as security there, and it's then their own, and they can sell it to cover the losses, for example. So this is very easy to understand. And the nice thing about this project, in my opinion, is that they already are working here with a platform that is already doing this real world asset market. So if we open this up here, you can see there are a couple of projects already here, where you can invest money, where you can borrow money, and so on and so forth. More projects here to be added. And you can also see this really here in their revenue. If I go back the last 365 days, so the green stuff you are seeing here on this chart is the revenue. You can really see that the revenue of a platform is pointing upwards. Even in this difficult times we have at the moment, they really had like record days that they didn't have before. And I think this is a good indication that there's probably a team behind the scenes that not only knows maybe what they are doing in terms of technology, in terms of coding on blockchain, coding smart contracts, and so on and so forth, but that also has an understanding of how to do business by the end of the day. That is not only having pipe dreams that don't generate revenue. Without revenue, the project is not going to survive, obviously. So this is one thing I like very much about it. One thing, although this project also lacks at the moment, is the usability. So I've spent some time on this platform to try to understand things, and I have yet to, I have not connected a wallet, so maybe that's the issue here. I've yet to find out really, okay, what are the steps I need to do if I want to invest, for example, into a project like this, or if I directly want to loan out my money in return for the rights to property, should they fail to pay my loan back. This is something I haven't found out yet. There's also a legal risk involved here, because especially when it comes to property laws, we just need to look at real estate for this, is that in different countries of the world, you are going to have different laws. And it's very hard, for example, probably to combine the property law of Germany, which is very, very strict, with the property law of, let's say, Singapore, for example. So these are obstacles working out. Nonetheless, I like the direction this project is going, because they are really trying to make blockchain tokens and so on and so forth accessible for everyday use. So that is very nice to see, apart from all those other, more techie projects we have out there that might be difficult to understand for some users. Last project I want to talk about is called Run. Has been around for actually a little bit longer time already, I think already since 2017. And Run is also addressing one of the big issues that are still difficult to come by. For example, what do you want to do if you want to quickly exchange your Bitcoin to Ethereum, but you want to make sure that you later can get your Ethereum back, and you don't want to go through an exchange? So this project is a so-called bridge, which tries to connect different blockchains with each other, so you can make transactions between blockchains without the need of going over an exchange. And so you can, like I said, I made the example just now, exchange your Bitcoin to Ethereum, and you don't have to go over an exchange. So you take away the third-party risk again, which is, hey, I'm sending my Bitcoin, for example, to this exchange. Right when I want to exchange it to something else, the exchange gets hacked, or there's a rug pull or whatever on the exchange, and my money is gone. This is called counterparty risk, third-party counterparty risk. And another beautiful thing here, which might be a little bit difficult to digest for many people out there, is that it grants anonymity. So when you exchange, for example, your Bitcoin to Ethereum, it's done on so-called dark nodes. Now, dark node sounds very dangerous or criminal. It's not. What that means is the one that is running this dark node is not able to see what exactly was exchanged and who exchanged what. So there's no KPI, so to say. And of course, this has a little bit the aura always of something criminal going on. There are people that want to launder money or whatever, but it not necessarily has to be like this, because the Bitcoin ledger, for example, is a transparent ledger. So when you can connect a wallet to a person, if I know that the wallet with this certain address, for example, belongs to you, I can see exactly what you did with your Bitcoin, where you sent them, from where you received them, and so on and so forth. And it's easy to trace your money by the end of the day. And this, of course, can be a problem. So it's good. Nowadays, people like to use like tumblers and mixers for that. It's not 100% solution for that. You could change it to Monero and back. That's also a solution for that. Or you could use a service like this, where you directly exchange other tokens without really leaving a trace. Of course, if you want to use that for tax evasion, that probably is a probability, but let's not assume the worst here always. And the interesting thing about this project is they are generating revenue. It's a bit choppy, but like I said, they have been around for a long time, and there are a lot of those bridges out there that do the same, by the way. But the interesting, what my opinion at least sets Run apart from those bridges, is that they might be a little bit of a dinosaur, so to say, but they have not been hacked like other bridges. And what we are seeing at the moment is that a lot of those cross-chain activity is actually flowing back to Run because they know what they are doing, and they have been integrating more and more new things you can do with their swap capabilities over time. And I think that's very nice. So this is the third project I like. Let me really emphasize here again, I'm not invested in any of those projects yet because I don't want you guys to think I'm running some pump and dump scheme here. That is very important in my opinion. One last project I want to to introduce to you, but it's not really a token you can buy. It's concerning Bitcoin. And probably this is a news that you might not have heard about, but it's actually a big one, in my opinion. It's about a project called Taro, Taproot Powered Protocol for issuing assets on the Bitcoin blockchain that can be transferred over the Lightning Network. Taro enables the Lightning networks to move a multi-asset network with Bitcoin at its core. And so what that basically means is if this project is successful, and right now it's in the phase of where it on a scientific level still needs to be peer reviewed. But if they are really able to pull this off to use Taproot on the Bitcoin network, Taproot is something that was integrated into the Bitcoin network last year in November. It was a pretty big thing. I think it kind of fell under the radar a little bit. And this basically allows in the future also to use the Bitcoin network for smart contracts. And if they are able to pull this off, that you basically can trade any asset over the Bitcoin network or Lightning networks, what would that mean? That would basically mean that every other altcoin out there, every altcoin becomes overnight worthless, because everything that altcoins were made for is now also possible on the Bitcoin network. And what would you do as an investor, or as somebody that wants to use smart contracts? Would you use some small altcoin with a semi-decentralized networks where you always have the danger, that somebody gains so much power in the network that they basically can do with the network what they want? Or would you choose the biggest network there is? You probably would go for the second option. At least I hope you would do that. So this is something I personally will keep my eye on. I don't expect that this is something that is going to suddenly appear now within the next 2 or 3 years. Usually things like this, and we've just seen this with Taproot, take longer time to develop, or also with a Lightning network, which is in development already for a very long time and just gaining slowly traction now. But should this happen, then Bitcoin would be the winner. That's why, in my opinion, it's always important not to put your whole money into altcoins, but to have always a solid foundation of larger blockchains. If you prefer Ethereum, then choose Ethereum. If you prefer Bitcoin, then Bitcoin. I personally only invest around about 10% of my net worth, of my liquidity, into altcoins, and then those 10% I try to put into 10 to 20 different projects, because as I've just tried to show you, it's very, very likely, even if a project is very, very solid, that it's going to fail. Maybe because it's ahead of its time.Maybe because one of the core developers is pulling out, wants to do suddenly something else. Maybe because they make not wise business decisions. Maybe they are hacked. There are a lot of possibilities why those projects can be failing, despite being very, very good and very, very solid in their white paper, so to say. So always be prepared when you have 10 projects that you invest in, that probably with 8 or 9 you're going to lose some money or a lot of money. By the end of the day, it's important to get also a little bit lucky, find this one project that has been maybe 10, 20 or 30,000% in performance, which will not only come up for the losses in the other projects, but really give you the opportunity to catch a project like this early and really, really make a lot of money. All right, good. Let me scroll a little bit through the questions here. Let's see what we have there. Wish BTC could stay above surf. Yeah, I wish that too. Do you think? Yeah, this is an interesting question here from Diego. Do you think there's a crisis of NFTs, or is it just bad timing? Everything will be back to normal. We've just seen that we've just seen a real world NFT where the price has fallen by 99%. And I think it's difficult to recover from there. Nonetheless, NFTs are a great technology, and we've seen more the speculative side of it, because it allows the easy and immutable transaction of ownership on something. I'm thinking, for example, there really of real estate. I'm thinking also of insurance, for example. I'm thinking also of stocks. Yeah, if you buy Apple stocks or Tesla stocks or whatever, move them from NFT, that could be possible. So things will be back to normal, maybe, however, not so much with art. I'm not an art expert. That's why I also never invested in those JPEG NFTs, because I just don't have an understanding of art. And my guide always is for myself that I don't want to invest in things I do not understand. So, I mean, if you are down already by 90+%, what can I say? It's too late, of course, to realize your losses. Then you might as well try to sit it out and hope that maybe it will come back then again. Okay, let me on another question here from Diego about stablecoins. Do you think what happened with Luna could happen again? Yes, absolutely. I mean, we just need to look here at the top 10 at the moment, and we see that three projects in the top 10 are stablecoins. We have Tifa, we have US dollar coin, and Binance US dollar. And we saw already, also after what happened with Terra Luna, Terra UST, that Tifa was attacked too. In fact, it is trading below $1 still at the moment. And it's especially Tifa. I don't want to say it's a sketchy project, but it's not really transparent, right? So that's why I say whoever cracks stablecoins in a transparent way is probably going 20 years down the road, get the Nobel Prize for economy for that. It always could happen. Not only with stablecoins, with any project in crypto, this can happen, maybe with the exception of Bitcoin, really, because the network is so big at the moment. And not at the moment, it is big and it's going to continue to grow. What else do we have here? Okay, also interesting question. Hello, Dirk. I was wondering if we would ever see an academy fund one day we could all follow along with. Also, I would love to hear your thoughts on the co-vesting token, where it's now in the future. Yeah, I think it's a good idea, an academy fund. However, the problem there is, and I've discussed this with PrimeXBT, by the way, also already, the problem here really is the regulatory side. Because combining what I'm doing here on YouTube with being a fund manager at the same time is a conflict of interest in many regulatory areas of this world. And of course, we want to really, not do anything there that would put us in danger of committing something against regulatory standards. So that is always, should we figure that out one day, of course, we might continue down that road of thinking about launching something like this. Why not? By the end of the day, right? Yeah, quickly, where did my window go? Here we are. Yeah, also, do you think recent events have damaged investor trust in the crypto world? Of course. And we can see this, for example, with trading volumes on all exchanges, right, at the moment, that they have a tendency to go down a little bit. Probably a lot of people that just got into cryptocurrencies really were burned, are scared now, lost a lot of money. I know quite a number of people that invested in Bitcoin, that bought Bitcoin at $69,000 US, that are really in a bad mood right now, even if you tell them, yeah, it's probably going to come back because the same has happened 3 times before already. It might take a while, of course, but it's hard to lose money with Bitcoin. Yes. However, so the damage is there for sure. Much of the damage also caused really by Terra Luna. But when I see nonetheless, especially with Terra Luna, with this Terra Luna 2.0 they want to launch now, that there seems to be a lot of investors out there that are still want to put money into something like this, into a person that basically destroyed $40 billion US. That shows that the interest is there. And we saw the exactly same, by the way, with the internet. When I started my careers in the late 90s, I firsthand witnessed the dot-com bubble. and saw, and it was exactly the same. You had all those projects. You just needed to write internet on your project, and investor would throw money at you, and then eventually it all came raveling down. Nonetheless, back then also projects like Google, like Facebook, like Amazon were born. So there are going to be projects that survive, and the technology is going to be developed forward. It's really the difficult part, of course, is picking the right projects for the future. All right. Here, another good question, in my opinion. Do you think ETH, Ethereum, will overtake Bitcoin as the top coin by 2022? No, I don't think so. And I think Bitcoin should not something really happen that I personally cannot think of at the moment. I think Bitcoin will always stay the number one coin, just because it has the largest network by far. And probably Ethereum is going to get another push now when they finally change to proof of stake. However, I'm not personal opinion here again, of course, I'm not personally a friend of proof to stake, because I think it's just fiat 2.0. If you have a lot of Ethereum, you're going to be greatly rewarded by proof of stake when you stake your coins. This is something that cannot happen in Bitcoin. And I think so. Maybe they can get to a level, onto an eye level, but I hardly believe that as well. I would be really surprised if we ever in the next 20 or 30 years see a crypto project bigger than Bitcoin, honestly speaking. But I like to be proven wrong. Good. This one is also nice here. So maybe two more questions. I'm seeing we're already approaching the 50 minutes mark. I wanted to keep it short, half hour, but once I get going talking about cryptocurrencies. How can I balance my portfolio between stablecoins and other cryptos to reduce risk? Well, first of all, if you have the option of directly, so first of all, if you want to hold stablecoins, and it's a valid option for you to, instead of a stablecoin, for example, hold directly the fiat currency, I would always go for the fiat currency. So instead of, let's say, having 10,000 US dollar tokens, if I really don't need this money to next week invest into crypto again, I would always try to rather have a 10,000 US dollars on my account. In general, what counts for crypto counts for every other asset as well. Do not try to be too over-invested in one asset. Meaning, do not invest too much of your money in general in cryptocurrency, not necessarily stable coins or normal cryptocurrency, non-stable coins, cryptocurrency that counts for every other asset as well. You don't want to be fully invested in just cash on your account, because inflation is going to eat it up. You don't want to be fully invested only in stocks, because we also saw that stocks can go down. Something that we haven't seen so much in the past 10 years or past 15 years, actually. And also, you don't want to only own real estate. We saw that in 2008, what can happen then, where a lot of Americans were heavily leveraged, over-invested in real estate, and suddenly the real estate market collapsed. So it's the same there. Try to split as much as possible. And have a little bit in crypto, have a little bit in real estate, have a little bit cash, have a little bit of stocks, have a little bit of bonds, and so on and so forth. Maybe a little bit of gold also. Diversification is, in my opinion, the goal really to keep your money and slowly, have a good risk adjusted return on investment on your money. Of course, if you are now maybe you don't have a lot of money. Maybe you have $400 or $500 of hard-earned cash sitting around that you want to invest there. Yeah, of course, then you have to take some risk to get to a level, where you actually can diversify. And I get that is difficult, but that's where most people have to start, of course. Good. One last question from EMH, because you're always watching, I know that. So thank you for being here with us today again. Dirk, BTC bear market seem to be getting smaller in time and percentage drop each time. Did you notice this too? Yes, and I think it also counts for the other side, for the bull market. So there's a theory, I think it's called, of diminished returns. Meaning as when the more mature an asset class gets, so the more investors, especially institutional investors, come to an asset class, the volatility decreases. And with the volatility decreasing, you won't have the swings of like 80 or 90% to the downside anymore. But you're also not going to have the super large returns, of like 10,000% or 20,000% in 2 or 3 years anymore. And I think this kind of seems to be the case. However, this also could have been caused, especially to the upside, that we are in a very, very special market environment. I am quite a big fan still of a stock to flow model, which predicted $100,000 in Bitcoin last year. Now, that didn't happen, obviously. And I think it didn't happen due to so-called black swan events. Black swan event, for example, was the coronavirus. So something the market cannot anticipate, something you really cannot predict is going to happen. The same goes for the high inflation we are seeing right now at the moment. And so I think these might be things that led to an underperformance of risky assets such as cryptocurrencies, such as Bitcoin in this example. And I'm really nosy because I was just thinking the other day, normally when you have events like this where something underperforms that at its core is a good investment, you will then see it like a rubber band snapping back eventually and overperform again. So maybe during the next cycle, during the next bull cycle for cryptocurrencies, we will see an overperformance of Bitcoin with prices that nobody can think of at the moment, or nobody dares to think of. Let's see how it turns out. Well, you guys know I'm very, very much into Bitcoin. I'm, of course, heavily invested also into Bitcoin. So maybe I'm a little bit biased there or so. Good. Let's come to an end here slowly. Thanks, guys, for attending today. As I said, if you liked this live stream, please leave us a like, subscribe to the channel, and leave us a comment also here on YouTube if you want to know more about, about crypto projects, altcoin projects that I think in the future could become, the new revenue generators for us, so to say, the new Dogecoins with insane profits to make. Then I will look more into this. I will happily share my findings there with you, especially also when it comes to play to earn. I think this is a segment really that is worth looking into more with investors' eye. Leave us a comment there and stay safe out there. Happy Father's Day to all the fathers out there, which we are celebrating today in Germany here. Take care. Going to see you again very, very soon. All the best and bye.